passive income for a very, very long period of time. Kasi you were sharing to me kanina that kung mag-invest ka ng ganun, it's something that will allow you to have repetitive income with a compounded rate that will be the same for a stretched number of years.
Yeah, so basically what happens is that the underlying assets is a mixture of bonds and equities, but the equity portion is quite small. So far, usually it's less than 50%, 30, 35, 40%. Ganun na yung equity portion. But what happens is the insurer, what they do is that on good years, if they make more than the projected income, they kind of like put the extra money on reserves. Tapos on bad years, they get the extra money to pay off for the projected income. So what happens is that yung yield for the policyholders is smooth, no? So basically, same almost.
Pero you said may equity component to?
The equity components are it's not gonna be transparent to the policyholder kasi basically they report it if you want to see it, but what you get is actually more consistent returns because they kind of manage that for you.
Hi everyone, this is Marvin Germon, a stock market trader and investor, and I love YouTube because it allows me to share my thoughts, my ideas when it comes to stock trading and investing, because I really believe the stock market is one of the greatest ways for Filipinos to let their money grow. That if you put your money in time deposits, guess what? It really won't go down, but it really also won't go up, and you'll just be beaten by inflation. And the goal of videos like this is to educate you so that you can win and you can trade the markets with confidence. Before we proceed to the next video, would super appreciate it if you could like, subscribe, and comment so you get to be part of this video and you get to see more videos to come in the future. And smash that bell, guys, so that you get updated every time contents like this will come out. So that's it, guys. So I hope you enjoy the rest of the video. Hi guys, it's midnight here in Singapore, and guess what? Who's back? No, he's not back. I'm the one who's back here in Singapore. But we have an update. Jess was telling me kanina that it's possible for you to get an insurance that will function like a real estate, where you get passive income that's recurring, but not just passive income, with the ability of capital appreciation. So Jess, how does that happen? How does that happen in 3 minutes? How can you explain that? How is it possible? Go.
Basically, they're instruments where they call it annuities, no? So they pay out a lifetime of income, but the definition of lifetime normally is until 100, and then it's a very good solution for retirement.
Okay, so 100 siya because it's still considered an insurance policy, parang something like that, no?
Well, yung 100 because it's difficult to keep on paying forever. So the assumption is that by 100, everybody already passed away. So they'll probably change the numbers in the future. But for now, at least the life expectancy in Singapore is around 82 for males and 86 for females. So the 100 already is a buffer.
Okay. So how does it work? How does it become like passive income for a very, very long period of time? Kasi you were sharing to me kanina that kung mag-invest ka ng ganun, it's something that will allow you to have repetitive income with a compounded rate that will be the same for a stretched number of years.
Yeah, so basically what happens is that the underlying assets is a mixture of bonds and equities, but the equity portion is quite small. So far, usually it's less than 50%, 30, 35, 40%. Ganun na yung equity portion. But what happens is the insurer, what they do is that on good years, if they make more than the projected income, they kind of like put the extra money on reserves. Tapos on bad years, they get the extra money to to pay off for the projected income. So what happens is that yung yield for the policyholders is smooth, no? So basically, same almost.
Pero you said may equity component to?
The equity components are it's not gonna be transparent to the policyholder kasi basically they report it if you want to see it, but what you get is actually more consistent returns because they kind of manage that for you. So parang yung what happens kasi yung mga insurance company, they have what we call life fund.
But this is not parang yung typical VUL na may insurance component tapos meron din siyang component na equity based siya.
Okay. So it's different from VUL kasi yung VUL you are subject to all the volatility. Okay. So at any point in time, if the market is down, then the value of your policy is also down, right? Kasi we are exposed to that equity exposure. So
ito impossible na maging down yung portfolio that it will ever parang hit negative also even in a bad market.
No, it won't get negative because there is a guaranteed portion. So the insurer will guarantee as a portion of the yield. Tapos a portion of the yield is also non-guaranteed. But historically, what they do is they try to maintain the projected yields. So it gives the policyholder what they call this predictability in managing their finances. So it makes a lot of sense especially for people who are planning for retirement. Kasi what we want for retirement is non-volatile recurring income that is very easy to manage. Meaning, wala ka nang isipin. Kasi normally for example, you buy a property, right? A lot of the retirement income solutions, yung traditionally, is you buy a property. But when you buy a property, normally what happens is that you still have to manage your tenants. You still need to manage in case there's any breakdowns. So there's maintenance costs, there's renovation costs.
So this one you skip all of that na wala na
you skip all the headache.
Wala na lahat yun. Okay.
Correct. The other thing kasi is also the potential liquidity. That's the big question, right? Kasi typically for properties, especially if you buy properties that are expensive, it's not easy to liquidate. You have to wait for the right buyer.
So ito, you said that you can get 23% per year on a compounded basis for this?
So the 23%, teka lang. Yes. This is for the people with that if they're willing to wait from a much longer period. Kasi so basically what happens is that for those people who are waiting and letting the money compound at a certain number of years, you can take out your sum of your capital, but the yield is still the same. So technically, your rate of return is a lot higher. Yeah, so it can potentially go up to that high, depending on when you want to stop getting the compounded returns and just start getting income.
So to make it simple to everyone, this is a way for them that if they want to invest for retirement, pero they don't want the volatility, they just get somehow this product na connected na insurance list, but at least it gives them repetitive returns for a very, very long period of time.
Yes. So it avoids the issues of, for example, if you buy bonds or equities where every time you need to take a look at the market, what's available. But the problem with that setup is that paano kung you're not able to get the right timing to buy these instruments. So what happens is that you actually have time lost in between. Similar to, let's say, you have a property tas wala kang tenant for a while. So your yield, when you calculate it, it sounds like it's bigger, but you're forgetting about the time that you don't have tenants.
Okay.
Or same thing with the...
So it will hit your yield also.
Yeah, it will hit your yield if you calculate everything. But most people don't calculate it because they focus on they forget about some of the other things, right?
Okay.
So yung mga ganitong type of policy, the actual yield is smaller, but because of the continuity and the fact that you can compound the money, the magic kasi is actually on the compounding.
Okay.
If you're able to compound the money continuously over several years, then the impact will be very big.
Very, very big. All right. So, lastly na lang, you said that this is very, very good just in case may market crash. Last May, when I was here, you said that the market is about to crash soon. Where are we now? Dun sa, ano na yun, sa portion na yun?
It's hard to say, but I don't think we're crashing yet. We're near, but I don't think it's there yet. It's probably still, for those who are very aggressive, it's still a good time to buy. Normally kasi for any recession, it doesn't happen actually like a crash. It's like a big drop and then goes up again, then slow down and then come down again. So
we're not yet there.
I don't think so. I don't think so. But we're very near. Kasi
we're very near.
Normally when we reach that, wala pa kasing euphoric stage eh. So the only time that I feel that we will really be at a crash if everybody thinks that's going up.
Right. So
I mean, if you ask everybody, if you ask people, some people are still scared of the market.
Okay, so we're not yet there, guys. Pero please remember, pagdating na yun. So, if you want to know more about what he talked about, I'll put the link below. So, either you're from Singapore or from another country, just meet with him. So, he's an insurance guy. He's the guy who will give you the annuity. So, that's it, guys. So, good news. Wala pa daw crash. Pagbalik ko sa Singapore again next year, let's see where are we already in terms of that.
Depending on which month you come back.
So I hope this video helps you trade well, trade strong, trade smart. See you again soon with Just Wait. Bye-bye.
Bye.